afternoon, everyone, and welcome to Stock Market Today. It's Alyssa Quorum here. I'm joined by Ed Carson on this Monday for Stock Market Today. We're going to be taking a look at three charts: Dexcom, Amazon, and DocuSign. But before we do that, we need to take a look at the major indexes. So here's a chart of the S&P 500. It's slightly delayed here, but as you can see, significant losses across the board today, undercutting Thursday's lows. So what do you make of the action today, Ed?
Well, it was pretty nasty. I mean, it shows you Friday's big rally, it doesn't really mean anything. And we knew that at the time because some of the best days in markets tend to come in bear markets. You need to wait for a real fall through. We're nowhere near that. The market is plunging. I mean, we still see more and more new cases, especially outside of China and the US and Europe. We've seen more and more businesses and corporate and governments restricting activity. San Francisco, just a few minutes before the close, basically put out a shelter-in-place order saying basically people need to stay in their homes unless it's for essential reasons, and that includes for work. Like either you work from home or you don't, unless it's for essential purposes like hospitals or you're part of the police or some such. So really drastic. At the same time, President Trump came out and said, we may be in a recession. People shouldn't get together in groups of more than 10. I mean, it's just really, really intense. Investors should shelter in place, to be honest with you.
Right. Yes, we've definitely been saying that cash is where you need to be. And just quickly, let's take a look at a weekly chart of the S&P 500. We can see touching essentially that 2,400 level intraday and nearing that, or actually undercutting the 2,400 mark and nearing the lows from the Q4 2018 correction. And moving on, let's take a look at DocuSign. That was our stock of the day today. Some whipsaw action here, Ed, opening down, over 10%, almost 15%, I think, at one point up over 10%, closing down for the day at about 6.5%.
Yeah, and that was actually big outperformance versus the S&P and the other major indexes. This was our stock of the day today. It does electronic signatures, and you can imagine if people are working from home, there's sort of a tangential coronavirus play, not as big as say a company like Zoom, and this has been doing very well. The relative strength line looks great, but as you can see from the whipsaw action, from just the fact that it's been falling in the last few weeks, even though it's been outperforming, that this is a stock you want to pay attention to, but you don't want to actually be buying it. You don't want to be buying anything right now.
Right. And we also want to check in on the chart of Amazon. So we're pulling up a daily chart here for that. Amazon also falling today, closing in about the middle or so of its range for the day, down about 5.4%. And as you mentioned, Ed, we have this news of San Francisco sheltering in place here, along with what we're seeing all across the West Coast, essentially from Seattle down to LA. It's looking to be a little bit more severe, but what impact does that have on Amazon, which is supposed to be fulfilling all of these online orders for people who are not able to leave their homes?
Well, I mean, obviously it puts them in a relatively good position, it would seem like, because they can do deliveries. There's the e-commerce that they have because people aren't going to be leaving their homes in San Francisco, but just in general, people don't want to go out and be exposed. So that's relatively positive for them. And the RS line is hard to see, but it's moving up, almost hitting new highs today. It's like on a weekly chart, it is hitting new highs. So that's a real move up in the last few weeks. There's a report just before the close that Amazon is looking to hire an extra 100,000 people because it's dealing with the crush of orders. Even Amazon is running short of some household supplies because people are buying all sorts of stuff. Anybody who is shopping out in the stores in some of these cities, you can probably, the shelves are clear in a lot of these things. So even Amazon's running into that. So it's a positive, but you can also see how much Amazon has fallen in the last several weeks. Again, this is one to watch, but not to touch.
Right. That's the irony, right? That RS line is spiking even though the stock has been falling. So we do talk about the RS line a lot, but investors should know that you can't use that as your only signal for getting in. You really need to be looking at all of that technical action. And last but not least, let's check in on the chart of Dexcom. We've been keeping an eye on this diabetes play, and it looks like it closed down about 17% for the day. And really, up until recently, this is one of the names that was holding up relatively well, but you always have to continually update that watch list, right, Ed?
That's right. And that's one reason why, relative strength line, these high RS line stocks, these are the kind of stocks that may lead the next uptrend, but you never know if that's actually going to happen, if they're going to keep holding up during a long correction. And again, the RS line, while it's taken a real drop the last couple of days, isn't that far off highs. It's not like you should just ignore this. I mean, if the market turns around, it might bounce back, and that's fine. But you can't say, oh, I'm just going to hold on to this stock because everything's going to be fine. It's a high RS stock. It's been holding up well. All of a sudden, a stock that can suddenly just start falling apart because the market is too.
Yeah, that's right. Well, we will be continuing to update everyone, keeping everyone abreast of the latest market moves. We know it's really crazy right now, but you can count on IBD for the analysis that you can trust, both on this show, on investors.com, and of course on IBD Live. So make sure you are tuning in every day for the latest. But that's it for now. Thanks so much for watching, and we'll see you right back here tomorrow.